What's going on, guys, and welcome back to another video. So today I want to discuss my plans on buying 3 more positions, 2 to dollar cost average and the third due to upward potential in my opinion, and second of all I want to discuss my plans on investing outside of trading 212. And with all that being said, let's dive right on into today's video. As we can see from the chart on the left, it's been quite a choppy week in terms of up and downward potential. At the moment, we currently have about €8,018 invested, up about €977 or 13.88%. So today we're going to keep it pretty straightforward. We're going to put €50 into each of the 3 companies. Again, the 2 to dollar cost average and then the third due to upward potential. Firstly, let's look for the 2 dollar cost average stocks. Now again, in yesterday's video we went through my portfolio in detail, so I'm not going to do that today. If you would like to pause the video at any time, you can see the positions on the right over here. But we can see both are in the green for now. We're up 27.6% within the sector, so we're not touching either of those stocks. In consumer discretionary, we're up 1.66%, and straight away off the bat we can see Tesla here is down 11.11%. So that's definitely the first company I'm going to put €50 into today. So we can see here that we now have that buy order in for Tesla once the markets open at 2:30 GMT. Now for those of you that might be new to investing or this channel, the whole premise of dollar cost averaging is quite straightforward. It's literally buying a company when it goes down in value. So let's say you bought company A for 100, it drops down to let's say 80. So if you bought the second share at 80, your average price is now at 90 instead of 100. So it's literally very straightforward in my opinion, and it's very effective long term. If we continue going down here, consumer staples, we have 3 positions, all in the green, up 6.1% and have €1,250 invested. In the energy sector, we're up 11.9%, have €455 invested. And we can see straight away off the bat here, again, iShares Global Clean Energy ETF is down 15% at the moment. So that's the next company I'm investing in. Because the London Stock Exchange is already open this morning, that €50 went straight through to the London Stock Exchange. And we can already see straight off the bat, just from investing at €50, it's after downing or improving our dollar cost average, should I say. It went from down about 15.5%, it's down now about 12.4%. So even just by doing that, we've effectively shaven off 3% of the red. Now I've made numerous videos on the iShares Global Clean Energy ETF in the past. I'll link them in the description below. But effectively, as a long-term investor, I really do feel that the likes of these clean energy stocks, again, holding an ETF is very imperative in my opinion, because it encapsulates all the different forms of the subsectors within the energy sector. So we can even see below here, Chevron and ExxonMobil, the 2 old school energy style stocks. They're doing pretty well at the moment. ExxonMobil is up 66% and Chevron is up 45%. Now, long term, I do feel there's going to be a switch from these older school energy stocks up to these clean energy stocks. So even by getting in at 15% discount at current prices is a bargain in my opinion. As a long term perspective, I really do feel that this is going to be a good ETF. Now the 2 main reasons why this ETF is currently down a fair bit is firstly due to the overall economic conditions and the kind of move away from the clean energy style companies. Now there was a lot of hype once Biden became the president, so as you can imagine, straight after hype there has to be a bit of a correction or downfall. So that's one of the main reasons why the price is down. And second of all, probably more importantly, is that there's about 30 or so holdings within this ETF, and their top position, Plug Power, has been in the news of late, all for negative reasons, mainly due to financial errors on their part. So obviously if their top holding within the ETF is down quite substantially, that will affect the overall ETF as well. But going forward again, I just feel this is a small blip, and long term this is a solid ETF in my opinion. Then have my ETF sector pie, which is up 17.13%. Now again, usually I don't invest into companies or ETFs further unless they're in the red. However, I've made points in the past that you kind of have to if you're holding the S&P 500 and FTSE 100, as it's going to be very rare once they drop below, let's say, 17% or 14% respectively. So for that reason, probably next week I will be investing further in these ETFs, even if they're in the green, as this will be kind of more of a long-term approach as well. So they'll always go up in value long-term. These ETFs, you can't really lose money if you hold long-term within these kind of main ETF markets. In the financial sector, we're up 30.5%. 5 holdings here, again, we're not going to go into them today, but they're all doing quite well in my opinion. If we keep going down, healthcare sector, we have 10.6% in the green, 3 holdings, again, they're all doing pretty well, so we're not touching that. Industrials, 18.7%, all 3 are in the green again, so we have nothing in materials. In real estate, we're going to come back to the penny stock sector because that's where we're putting our other €50. In the real estate sector, we're up 9.28%, 1 holding, And technology, we're up 16.1%. All 5 holdings are doing quite well at the moment. So that then leaves us with the penny stock. Now, I've made many videos on HighTide, ticker symbol HITIF, in terms of upward potential going forward. At the moment, it's trading at about 65 or 70 cent per share, and we have about 78 or so shares at the moment. It's my smallest position. We only have about 42 euro invested, and it's currently up 8%. So again, just like my ETFs, I don't usually kind of invest further into any of my stocks unless they are in the red. However, these kind of exceptions are penny stocks because I have so little capital in here at the moment that I will be doing this, and I do feel long term that they have extreme upward potential in terms of a penny stock. So I see a lot, obviously penny stocks are a lot more risky than the normal style companies. However, I see there's a lot more upside than downside within this stock. So I've now put that 50 euro into HighTide as well. Once the OTC market opens, that order will go through. We can just see on screen here from a video that I made about a week ago, just some key points on HighTide and why I believe they are a great penny stock going forward. Again, just product diversification and product offering. They have numerous different subsectors, which is extremely important for a penny stock. They have celebrity endorsements such as Snoop Dogg and Cheech and Chong. Again, they're the kind of people you need in this kind of sector if you want to grow. They have a great CEO in the form of Raj. They're ever expanding, as I just said, so they're opening new stores nearly every day at this stage. They are the leading Canadian cannabis stock as well, so again, that's of big importance. They have huge potential at current prices. Now, when I made that video, they were sitting at about 60 cent or 65 cent. I think at the moment they're sitting at about 70 cent or so. So that's just a rough estimate. So they are improving at the moment. And finally, they are filing for the NASDAQ. So that's already started that process. And as you can imagine, if they actually get onto the NASDAQ, that's going to really increase their exposure, effectively driving up their share price. So as it stands, our overall portfolio value is now sitting at 8,160 euro. We invested further into 3 stocks / ETFs today. The first of those being Tesla. We put 50 euro further in there. Again, we can see it's 100 euro pending orders here. The first of those is for Tesla. The second stock we invested in is HighTide, ticker symbol HITIF, which is Canadian Cannabis stock. So that OTC market isn't open yet either, hence why it's pending. And the third ETF or / stock is the iShares Global Clean Energy ETF, which we invested a further 50 euro into. And because the London Stock Exchange is already open, that order already went through. So the second thing I want to discuss very briefly is another broker. So at the moment, I have 8,100 euro or so that I already stated in this portfolio. I'm protected up to 20,000 euro because I'm not within the UK. If I was, it would be 85,000 pounds. So for that reason, once I get to 10,000, I'm going to start pushing some of my newer capital into other brokers. So again, we'll stay here for the time being. But once we hit another about 1,900 euro or so, and we have that into the market, we're going to kind of move across to another broker as well. Just like any stock, you need to have a few to diversify in case anything did go wrong, and different brokers have different potential, product offerings, and up and downward potentials. As I mentioned in prior videos as well, I already have another broker in the form of DEGIRO, although I don't use it anymore. We currently have about 6 euro in the bank balance in this stock or broker. So the reason I did shift away from DEGIRO, because like a very brief backstory, I started off with DEGIRO about a year ago, and then once Trading 212 came about and they had commission-free trading, that's what kind of lured me over to that broker. However, as your capital begins to grow, these small commissions such as 50 cent per trade don't really make much of a difference. So that's why I still kept this broker open. But what I'm going to do is, because I'm open to options in terms of a different broker besides DEGIRO, and before I invest further capital, what I'm going to do is I'm going to put a poll on my YouTube community page, and I'm going to suggest or ask for your opinions on what brokers you use and what ones are best. As I said, different brokers have different upward and downward potentials. For example, the downward of DEGIRO is the small commissions you have to pay. However, I do prefer it in other aspects, such as the product offerings. For example, on Trading 212, you can invest in the Irish Stock Exchange, whereas you can on DEGIRO. It also gives you a better overall kind of balance, so it shows your daily, weekly, and overall balance in terms of profit and losses. However, on Trading 212, all you can see is your current positions. So even if you were up 1,000% in the position and sold it, it will effectively show on your screen as you'll be back to zero if you sold that position, even though you actually are up 1,000%. So that's another reason. Other reasons again is protection. So as I said, on Trading 212, you're only up to 20,000 euro invested, whereas on DEGIRO it's 100,000. So that's just kind of some very brief kind of topics or tips off the bat. So I can make a proper video in terms of comparing these two brokers if you'd like. If you would like that, just comment below in the comment section. I can do that over the weekend. and do a proper in-depth video on the differences between DEGIRO and Trading 212. So that's it for today. I just wanted to give a brief update on the 3 stocks/ETFs I was buying today with €150. That brings our overall portfolio up to €8,150 at the moment. And second of all, I want to discuss briefly my plans on having an additional stockbroker for when my Trading 212 account hits 10,000. If you found this video anyway helpful or entertaining, it'd be much appreciated as always if you are new around here, if you consider subscribing to the channel. And again, if you could smash that like button, it would really help the channel out. And most importantly, if you have any questions, comments, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. Thanks very much, enjoy your Thursday, and I will see you all in tomorrow's video.